Welcome to our YouTube channel, Presenting Profits. We do brief overviews of publicly traded companies so that you can decide whether to buy, sell, or hold. This channel is for entertainment purposes only and not financial advice. Always do your own research.
All right, let's talk about Oscar Health. They're making a promise that honestly sounds kind of crazy. They want to swing from a loss of nearly $500 million to being profitable, all in just 1 year. We're talking about a $750 million turnaround. So the big question is this a brilliant, calculated move or just a massive high-stakes gamble? Let's dig in and find out. But before we get into all that, let's back up. What is Oscar Health really? I mean, are we looking at a tech company that just happens to be in healthcare? Or is it a traditional insurance company that just has a slick app? Figuring that out is absolutely key to understanding their whole game plan.
So here's how we're going to break this all down. We'll start with what Oscar actually does, then we'll hit the numbers, especially that huge tug of war between their growth and their losses. After that, we'll check out their secret weapon, look at the bull versus the bear case, and then, we'll give our final take on this whole 2026 bet.
All right, let's jump right in. What is Oscar Health all about?
Okay, so at its core, Oscar sells health insurance plans. They focus on individuals and families who are buying plans through the Affordable Care Act, or ACA, marketplace, like healthcare.gov. Their whole brand, their whole identity is built on being the cool, tech-savvy, user-friendly option compared to those old-school insurance giants. They're trying to shake up an industry that everyone knows is just a total headache, and they want to do it with a really clean, digital-first approach. So that's the mission. But what about the money? What do the numbers actually say? Let's take a look at their financial snapshot.
As of early 2026, Oscar Health has a market cap of around $3.55 billion. And look, that's a pretty hefty valuation for a company trying to shake things up. But honestly, it's their balance sheet. That's where the real story is. And this is what's so interesting. You see this contrast, right? On one hand, they're carrying about $430 million in debt. That's not small change. But then, you look at the other side of the ledger, they are sitting on a mountain of cash, almost $4 billion, and they've just locked in another big credit line. So yeah, there's debt, but they also have this massive war chest ready to fund whatever they've got planned. And having all that cash on hand leads us straight to the central conflict for Oscar. It's that classic tech startup story, right? Insane growth on one side, but the cold, hard reality of actually making a profit on the other. I mean, just look at this growth. It's absolutely phenomenal. Their revenue shot up by $2.5 billion in just 1 year. Membership numbers are going through the roof. If you're just looking at the top line, this company looks like a rocket ship. But then you scroll down to the bottom line. After just barely squeaking out a small profit in 2024, they completely fell off a cliff in 2025, posting a jaw-dropping loss of $443 million. I mean, that is just a massive swing, and it's in completely the wrong direction. So you have to be asking, what on earth happened? How does that even work? How do you grow your revenue by billions and at the same time lose almost $500 million? Well, the answer is hidden inside one key number, a metric that's super important in the insurance business, but one that a lot of people don't fully get. It's called the medical loss ratio, or MLR for short, and it's actually pretty simple when you break it down. For every dollar in premiums that Oscar brings in, the MLR tells you how many cents of that dollar went out the door to pay for doctor's visits, hospital stays, actual medical care. And the bottom line is, if that number gets too high, it's just impossible to be profitable. And, well, here's the problem in a nutshell. Oscar's MLR shot up from just under 82% to over 87% in a single year. That's a huge jump. It turns out their members were just sicker than they had planned for. The industry has a fancy term for it, higher market morbidity, but it just means people were using their insurance a lot more. Maybe it was pent-up demand after the pandemic. Maybe they just got their risk calculations wrong. But honestly, the why doesn't matter as much as the what. And what happened was the cost to care for their members just exploded, and it completely erased any hope of making a profit.
Okay, so they have this massive problem. How in the world are they planning to fix it? I mean, how do they plan to not just survive this, but actually win? Well, it all comes down to what they believe is their strategic moat.
And their plan is pretty cool, actually. It's a two-pronged attack, mixing tech and a really smart market strategy. First up, they're going all in on their technology roots, especially with AI. They have this internal bot that's already handling a crazy 86% of member questions, which is huge for cutting down administrative costs.
Then, number two, they're going after this massive up-and-coming market called ICHRA. Basically, it's a new way for companies to just give their employees tax-free cash to go buy their own insurance plan on the open market. And you really can't overstate how big this ICHR opportunity could be. Their CEO, Mark Bertolini, lays it out pretty clearly. He says if smaller companies really get on board with this, Oscar's potential market of customers would explode. It would go from 21 million people to 96 million. That's not just a small bump. That would literally transform their entire playing field from big to, well, absolutely massive. So this is what it all comes down to, right? The core investment debate. With this big plan in front of them, what's the argument for why this will work? And what's the argument for why it might fail? Okay, let's break it down. The bull case, the argument for Oscar, is pretty strong. You've got record membership growth, which tells you people actually like the product. Their AI is legitimately saving them money. They've also jacked up their rates by about 28% for 2026 to fix that MLR problem. And of course, that ICHRA market looks like a potential gold mine. But the bear case is just as convincing. The losses in 2025 were just huge. Their most important cost metric went way in the wrong direction. And let's be real, pulling off a turnaround of this size is ridiculously hard. On top of all that, you've always got the risk of a new regulation changing the rules of the game.
So after weighing all that, where do we land? What's the final verdict on this massive 2026 turnaround bet?
Well, the company's leadership is calling 2025 a reset year. You know, a necessary step back. The CEO, Mark Bertolini, has been crystal clear about it. He says they've taken decisive actions to make sure they return to profitability in 2026. Make no mistake, they are putting it all on the line with this comeback plan. And here's the thing. This isn't just some vague hope. Their plan is incredibly specific. They are telling everyone they expect revenue to soar past $18.7 billion. They're aiming to wrestle that super important MLR number all the way back down into the low 80s, which would be a huge fix. And they're betting that their AI and tech advantage is the secret sauce that will let them control costs and pull the whole thing off. So when you boil it all down, this is the deal. Oscar is betting everything on perfect execution. This isn't about doing one thing right. It's about doing everything right. They have to make those big price hikes stick. They have to get their medical costs under control. They have to use their tech to be more efficient. And they have to break into a massive new market. And they have to do it all at the same time. No pressure, right? And that leaves us with one final huge question. Is this whole plan a truly calculated vision for the future of health insurance? A company using tech to finally crack a code that no one else has? Or is it just a massive, high-risk, all-or-nothing gamble that's either going to launch them into the stratosphere or see them come crashing back down to Earth? I guess we'll find out, because the 2026 numbers, they're going to tell the whole story.